and I want to let Maria ask some questions, but we know from the complaint yesterday, for example, that the two people that were charged were running a or were on the Silk Road website running a piece of it, I guess, where you could go in, a person could go in and exchange dollars for bitcoins and then purchase narcotics through Silk Road. And I guess I would ask all of you sort of how would you deal with that problem going forward with a regulatory infrastructure that would really address that? I mean, obviously it's not worth having a digital currency if that's going to be the world we live in, where you can just so simply go to a website anonymously through the site they created on Silk Road, exchange dollars for bitcoins, buy your drugs, and leave, and no one ever knows. I mean, how do we prevent that?
Well, we did prevent it. I mean, like Silk Road is gone, right? The existing, law enforcement did a fantastic job using existing regulations and their capacity and their capabilities to find out the people behind it, and they shut it down.
Are you saying though that it couldn't happen again today?
My point is that you're asking how can we control this, and my answer is it appears to have been controlled, like using existing regulations and laws. Law enforcement has both apprehended the person behind Silk Road, and in yesterday's again, I haven't read the documents, but sounds like they got those guys too through the system works.
Right, but they got them after a massive amount of drug dealing and money laundering went on over the course of several years, and that's great that they got them. My question is, how do we prevent that from, as regulators, putting guide rails in place that prevent that from sort of repeating itself? Or are you saying that we've already moved beyond a world where that could happen yet again?
There will always be bad actors. It happens in the cash economy too, right? We haven't eliminated, drug trafficking using cash, but the point is, at what point do you, overly focus on one issue at the expense of others? I did a little kind of poking around on, understanding, because Silk Road has certain Bitcoin addresses associated with it, and so you can actually do some research and figure out what proportion of Bitcoin transactions were related to Silk Road. And I did this, research with publicly available information, maybe 6 months ago, and it was about like 0.5% of Bitcoin transactions were related to buying drugs. So that's not zero. I mean, so there's work to be done, but it's far from the the pervasive use case that I think some folks in the media might have portrayed it to be. This is not an out of control problem, and it's only getting better because you're seeing a change in the nature of the people in the Bitcoin ecosystem.
I think yesterday's a message that Bitcoin's a terrible place for criminals to conduct criminal activity. Cash is untraceable; it's truly anonymous. Bitcoin's not. But that being said, gateway companies should, and I think that qualifies as the edges of the world of getting, bringing the fiat world into Bitcoin and Bitcoin into fiat. And I think those should be seen differently in terms of regulation as another company that lives completely inside the Bitcoin ecosystem. So maybe there's a gradation or a priority with regards to regulation, but I think a gateway company that is a choke point in and out of the system is definitely one that is important to look at from a regulatory standpoint. But I agree completely with what Jeremy said, and I think that the price of Bitcoin, the market has spoken. It couldn't be clearer that people demand Bitcoin and are interested for anything but illicit activity.
Okay, so I'm going to move away to Mr. Silbert. You talked a little earlier about who you think should be regulated in the marketplace, which sort of actors and which shouldn't. And I guess my question for you is, I think you had mentioned that the miners shouldn't be. So I'd like to kind of hear some reasons why, and then open it up to the rest of the panelists to explain sort of who would you think needs to be regulated in this marketplace and who doesn't, and why.
Sure. Yeah. So to kind of repeat what I said. If the focus is on money laundering and drug trafficking, and protecting consumers who have money with a company. You're talking really about the wallets, and you're talking about the exchanges.
Okay.
So if I carve those guys aside and I think about a merchant that accepts Bitcoin, I don't see, any risk that they provide to society. If I think about consumers that are, using Bitcoin, no risk. On the mining side, I can't think of somebody who is investing time and money to mine Bitcoin, how that can be used in illicit activities. They would ultimately, if they want to monetize that, they're going to have to use one of these exchanges that will be regulated. So that's why my initial reaction is I'm not sure how or why they should be regulated.
Practically speaking, I think it's a difficult question because it's such a global pursuit. Mining is guilds, and it's collected from all over the world. And it's also become such a professionalized, it's not a hobby anymore. So the mining outfits that you see are capitalized with 7 or 8 figure amounts of money. It's a huge endeavor. They're massive startups and data centers. So I don't know why a criminal would go through, have all those expertises, execute for at least 6 months to a year just to get Bitcoin, then to have to, go to an exchange like Barry said and realize that they can't pass the KYC AML. It just seems like not the path that they would take.
The way to think about miners is they are the infrastructure provider for Bitcoin. So most entrepreneurs today, when they build a website, they build it on top of something like Amazon Web Services. Amazon operates this massive, server farm, and the entrepreneurs build their software and deploy it on Amazon's web servers. The miners are playing a similar role in the world of Bitcoin to that. Today, they both create new Bitcoin, they mine Bitcoin, and they also are the ones who are clearing the transactions in the blockchain. That is actually one and the same. Eventually, when all 21 million Bitcoin are mined, they will then move over to just clearing the transactions of the Bitcoin, and I believe that there will continue to be some Bitcoin-related compensation for doing that. And that's a little bit wonky, and people are like, what? But really what we're talking about is they are the ones who are running the infrastructure that makes Bitcoin work. They are, instead of, the payment processors who run, the Visa network, the miners are the transaction processors who clear the Bitcoin transactions in the public blockchain. And so the point that Tyler made was that they are now professional operations. This is, it's very, very hard to be a successful miner as a one-man band now. And so there are these large and getting larger server farms, well, they're not really servers, but computer farms that are essentially running the Bitcoin infrastructure, and that's what miners are. So I think when you think about would we need to regulate them, you say, do we need to regulate Amazon in the world of in the world of running websites? I'm not really aware that that's a regulatory issue, and so I would think miners would be in the same camp.
From your description, it sounds like miners have the potential of wielding a tremendous amount of power. They're maintaining the infrastructure, and ultimately they're mining out the value. Suppose there's Dr. Evil out there who wants to corner the market on Bitcoin or wants to get control of the Bitcoin infrastructure. I think that's a concern that we've discussed internally. Maybe it's a false concern, and we'd be happy to hear it, but can you expand on that? At some point, all 21 million will be mined. Hopefully there'll be folks they'll turn to and the protocol will be changed, so there'll be some compensation so that they can further maintain. But if this gets too concentrated and Bitcoin becomes exactly what you're all betting it will become, don't you now have an economic infrastructure potentially in the hands of a small number of entities or people. And I think that's where it's slightly different from Amazon, and that's where our concern.
Well, what's interesting about it is that in some ways the Bitcoin architecture is self-healing in that regard. Amazon probably does run more than half of the global internet now, and the way that Bitcoin's architected, if any one mining operation were to run more than half of the global Bitcoin infrastructure, that would be essentially a massive security problem for all of Bitcoin. So the Bitcoin ecosystem has an incentive not to ever allow that to happen. So I think in some ways you're almost guaranteed some diversity on the infrastructure side because of the way that Bitcoin's architected that we actually don't have in the traditional internet.
I think I read a statistic a while back, and it's probably a larger number, but to get 51% of the mining capacity would cost $700 million of capital just to create that hardware to do that. So, and if you have that capital, you're better off staying at 49% just mining Bitcoin as opposed to doing a security breach over at 51% and having Bitcoin's value go down to zero. So it's interests are aligned to keep it diverse, but at the same time, it's a very expensive proposition for one person to go out and do some sort of Dr. Evil attack.
Mr. Wilson, oh, sorry, I have to push. Mr. Wilson, you had earlier said that you believe that we're in the sort of speculative phase or sort of phase 3 of Bitcoin and that we're kind of moving past that. About half of Bitcoin's market cap is still held by like just under 1,000 people. So sort of where are we in that phase and how do we actually push past that to get to this fourth phase you're talking about?
Well, I think we need to light up the economy. We need to make it so that you can do something with Bitcoin. We need to create the transactional piece of Bitcoin, and it's happening. It's actually happening very rapidly. Lots of merchants are now coming on board and starting to accept Bitcoin, and I expect that's going to be the big story about Bitcoin this year, is the number of merchants who start to accept it and the amount of transactions that are actually made with Bitcoin. Until that happens, there's really no thing to do. There's nothing to do other than to hoard it. I also think we need to get to price stability. I mean, there is some theoretical place where the price escalation maxes out and we reach a stable price. And there's big debates about what that stable price is. Some people will tell you we're there. Some people will tell you that we won't be there for another 10x. I don't have a theory on that. But I do think that at some point we'll reach a price where the market just kind of reaches equilibrium and there's no more appreciation, no more dramatic appreciation in Bitcoin. But as I said, I don't know what that price is.
Right, because the hoarding of it, I would assume to be antithetical to what you've all talked about being the real sort of purpose of Bitcoin, which is a payment system.
Well, I would say it's way more than a payment system, because the whole notion of programmable money suggests that Bitcoins can be used to do many, many things. But like any, what's really actually kind of interesting is that Bitcoin is the first new technology where the early adopters actually have a financial incentive and a financial reward for being early adopters of it. The early adopters of the internet didn't get rewarded necessarily unless they bought domains. That's probably the best example. But there's going to come a time when those, like if you were one of the early employees at Facebook, you've made a lot of money. Are you going to make a lot more money? I don't know. Most of the price appreciation in Facebook's probably already happened, and there's going to come a time when most of the price appreciation in Bitcoin's already happened, and then we're going to get to a different type of market dynamic. The question is, when will we get there? And as I said, some people think we're there already. Some people think we've got a lot more ways to go. I don't actually have an opinion on that.
I actually think, Marie, that it's less about how much Bitcoin is being held by a small number of people, and more the question of how many people hold Bitcoin, because that's what's going to drive transactions. It's terrific that there are a small number of people that hold tons of Bitcoin, but there's only so much stuff they can buy. What matters is that it gets held in the hands of a ton of other people who can start transacting it. And frankly, the most likely place that they will get their Bitcoin from is from the people who hold the most of it. So that's how it will happen in practice. But even if it doesn't, even if Bitcoin gets, spread out to lots and lots of people, and they're using it just for, transactions, right, they may not need to hold a great deal of it for their, for their transaction processing. As long as we get to that point, I think we're okay.
Can I ask a price volatility question, since you raised it? You think we get there in the near future or the future, you said? My question is, what will drive that? Is it how many people are ultimately coming into the space, how popular this becomes? Is it some other factor?
Liquidity. I think, liquidity and volatility are inverse proportion to each other. The more liquidity you have in a marketplace, the less volatility you have. Barry mentioned that we need a U.S.-based exchange. I think that'd probably be a really good thing. I hope he makes it happen.
Why do you think that hasn't happened yet?
There's a saying, liquidity begets liquidity in the marketplace world, and it's amazing, despite all of the negative comments made about Mt. Gox, MT Gox, the exchange in Japan, that it still has the market share that it has. And it really is this concept of if you have the buyers, you have the sellers, and vice versa. And so why has it not happened here? I mean, there's been a number of attempts to build exchanges here, and they've ultimately been shut down, either because they couldn't get banking partners, or the uncertainty around kind of regulation prevented them from actually being able to raise capital.
If I could just bring some of that discussion down to specific products that we heard about at the opening, it strikes us that there's some apparent tension in the investment strategy that you're trying to bring to market, that is a trust that's going to hold Bitcoin, and the whole notion of building this business model, which is, for lack of a better term, and I appreciate that it can be many more things, but a payment system. In other words, you've been talking about hoarding. The very nature, and correct me if I'm wrong, of this type of trust is to collect the Bitcoin because it has a certain value, and to hold it as that value increases. If liquidity begets liquidity, and the investment world is holding Bitcoin, how do you rationalize those two dynamics?
I think it's a good question. So hoarding or saving a Bitcoin, depending on how you want to look at it. I view it as somewhat of a self-correcting situation. If there's a sort of a boundary case where literally everybody's holding onto their Bitcoin and not transacting, then sort of the utility of the network, and as a payment system, I think the utility of holding Bitcoin sort of decreases, and the price will just lower to the point where people will be, will want to spend. And I think there's some number out there where someone bought a Bitcoin at $100 and it appreciates to 1,000. They're going to sort of look at that 10x, or maybe that person looks at a 5x. I don't know what, each person's sort of curve is different, but at which point they're going to say, look, I'm going to start spending this thing. The issue we need to create is a situation where there's places for them to spend it once they've decided to make that decision. I think companies like Coinbase, which Fred is involved with, is trying to make that happen. So there's sort of I view two elements. Like, there's the ability for people to spend Bitcoin, but I feel that saving or hoarding is a self-correcting problem. Now, with respect to the Winklevoss Bitcoin Trust, I think it brings a couple things to market that they currently don't exist. One of which is that there's right now there's at least 3 different exchanges that have a fairly significant amount of volume with all different price points. And so in terms of pricing Bitcoin, people who want to buy Bitcoin are obviously going to look for towards something like Bitstamp, which is generally one of the lower prices. People who sell are looking at Gox, and there's lots of reasons why some individuals can or cannot use a given exchange. The reality is there's no sort of cohesive price point or spot for Bitcoin right now, which makes it difficult. There's also, as Fred indicated, there's lack of liquidity, and I think I think one of the potential benefits of an ETF is liquidity and price discovery, and I think that those could be beneficial to the entire ecosystem, both for investors who want to gain exposure, but also for individuals in the payment system that want to transact. Because in order to transact, if Bitcoin is going to play out to be this global payment system that I think most of us investors believe that it can be, it has to have a market cap where it can absorb millions of dollars of payments and transactions on a given day. When we first looked at Bitcoin a year and a half ago, it was in, I think, under $100 million market cap. To sort of process even probably the number of transactions on a given day today would significantly move that market. So I think speculation in the Bitcoin market is sort of the necessary phase, and it's arguably like which point in that phase we're in right now. It's unclear, but in order to attract the smartest minds to build applications and build companies, to get funding, to get investors excited, you have to have a market cap that is attractive and an ability to process the transactions that you think it can process. And at $10 billion, I would argue that it's simply like if Bitcoin can play out the way it does, I think $10 billion probably can't absorb a global payment system on a large scale right now. Is that number 100 billion? Is it 400 billion? I'm not going to speculate at this point, but it has to just be able to support sort of the transaction ability and create a rails that will support that volume. It's also interesting to note that a Bitcoin can be divided into 100 million pieces, so it's almost infinitesimally divisible. So hoarding in terms of there will be no more left to go around is not really a problem, and that could also change because it's open source. The network, the people who core developers could decide that, okay, maybe we have to even make it more divisible.
Let me then, just changing topics a little. All right. Changing topics just a little. I was interested to know, as investors, whether, I assume you have, whether you've perceived how the traditional banking industry is reacting to Bitcoin, the growth of virtual currency, and what you think of that. Do you think Bitcoin is seen as a threat to traditional banking? Do you think it is a potential disruptive force that's going to drive change, or both? And I can tell you personally, I have my credit card with a particular bank, and I also have my bank account at that bank. And once a month, I have to pay my credit card bill by transferring money from the same bank to the same bank, from my bank account at the same bank to pay my credit card bill at the same bank, and it takes 3 days. I have to leave 3 days to make sure the money goes from one hand of the bank to the other hand of the bank, and that is a little crazy in my opinion. So I guess I've sort of prejudged the answer, but I wanted to hear how you're perceiving what you perceive to be the reaction from traditional banking, and then B, the potential changes that you all could bring about, or that the virtual currency industry could bring about.
I've been involved in the Bitcoin space now since I guess early 2012, and I like to think about the evolution of Bitcoin as follows, and it's a little different than Fred's phases. I have my own 5 phases. So phase 1 was the kind of the experimental phase, 2009 to 2011. It was technology, it was a protocol, hackers playing around with it, but there was no value attributed to it. And then summer of 2011, there was a price spike. A lot of the people attributed to the awareness created by the Silk Road site. And at that point in time, you started seeing kind of generation 1 Bitcoin companies getting created. Entrepreneurs, angel investors like myself investing in some of those companies. Phase 3 started at the beginning part of 2013 when the venture capital community moved into Bitcoin, with fantastic investors like Fred and Jeremy investing in kind of the second stage companies. I believe that this is the year of Wall Street with Bitcoin, and I'll come back to that in a second. And then phase 5, I believe, is mass consumer adoption, and it's only going to be possible for mass consumer adoption when there's a monetary base, as Cameron mentioned, that's large enough to support it, and more importantly, all the great companies that these investors are backing launch their products and services to make it much easier to buy, hold, and use Bitcoin. So I can tell you that being here in New York, interacting with Wall Street, and running really kind of the first investment vehicle, the Bitcoin Investment Trust, that makes it possible for investors, institutions, and individuals to invest in Bitcoin, I can tell you that I could fill my schedule 3 times over with meetings and educational sessions and breakfasts and lunches and dinners with all the major banks. And specifically to answer your question, banks today are multifaceted. There's certain divisions that are incredibly excited about Bitcoin. Those tend to be the ones that are involved in FX trading and commodities trading, the ones that have wealth management channels who are trying to think of ways to enable Bitcoin investing. You have kind of the commercial banking side who see the opportunity to bank a lot of new, great, innovative companies that are going to need a lot of banking services. And then you have the parts of the banks that make money off of maybe the 3-day float that you were referring to, Superintendent. And I think ultimately where they will likely end up is having to incorporate Bitcoin into their business, or perhaps even rethinking the way that they do their business. And maybe it affects top-line revenue, but I really do think it's going to take out a tremendous amount of costs out of the system that they should benefit from if they implement these changes.
This morning, a few of us here attended the NYC Bitcoin Banking Summit, sponsored by the New York City Economic Development Corporation. And one of the things that we heard was that banks were interested in doing business with Bitcoin companies, but they were worried about the potential adverse regulatory effects that they might have, that they may incur by working with Bitcoin-related companies. And so, at least in some instances, there are banks who've just decided that until there is more regulatory clarity, they will no longer bank any additional Bitcoin companies. I think it's very difficult to do business without a bank account, and so that obviously stifles innovation.
Yeah, I think Barry pointed out that the reason there's no large liquid Bitcoin exchange in the United States is a banking problem more than anything else. You can't run an exchange unless you can give your customers a way to move money in and out. If you can't get a big money center bank, or at least a reasonably sized regional bank to be your partner, you can't build an exchange. So we're going to need to see the banking system embrace Bitcoin. And I think that they will. This meeting that Jeremy and my partner Albert went to, I think, is an example of, and because Barry was there. Were you guys there? No, I wasn't either. That's a good sign. Typically the way the big industries react to new technologies is it's a little bit like the 5 stages of grief, and I think we are getting close to acceptance, and that's a good thing.
So in terms of the existing banking industry, I think that most of us would agree that the current system and just even wiring money overseas it's buggy, it's difficult, it's slow. I think we've seen a lot of times where solutions don't really come from the existing industry. With the recording industry, it sort of took iTunes to sort of sort out how do we price music and deliver it in a fair method. It didn't come from the recording industry. With voice over IP, the protocol that I think is in many ways very analogous to Bitcoin, the solution came from a technology company, Skype, and that disrupted all of the telecom incumbents. I still don't know why I pay sort of a data bill and a voice bill. I think it can all be done through data, but that's neither here nor there at this point. These solutions generally come from sort of the outsider. So I totally understand sort of the skepticism of the banks, and I also understand that I'm not sort of looking for the solution necessarily come there. I think that Bitcoin can actually help the banks, and I think they will sort of conclude that it's going to make things more efficient. In terms of like the stages of Bitcoin, I kind of jokingly take more of a philosophical view and look towards Gandhi. And he sort of said, first they ignore you, then they laugh at you, then they fight you, then you win. We were definitely in the ignore stage. People thought Bitcoin was, not really worth giving much thought to. Then there was sort of all this talk of a bubble, and it's not real. It's a fad. It's going away. I think all the technologists and the people who have sort of entered the space have proven that that's not the case. So I think that there's individuals whose interests will not be aligned with the success of Bitcoin and have big revenue streams. I think, Mr. Diamond's comments in Davos in particular, they fundamentally, he's not aligned with the success of Bitcoin in some ways. And I also think that he sort of spoke to, one of his criticisms was sort of that Bitcoin is anonymous, and that just belies a fundamental misunderstanding of Bitcoin. It's not anonymous. So, yeah, I think that's That's all I have to say. I mean, it's very predictable who wants Bitcoin to succeed and who doesn't. I think all of us are heavily staked, and we make no doubt about that. But our whole purpose is that there's a greater promise. There's a better world with Bitcoin. So when bankers who have 3% credit card fees and stuff, like Mr. Diamond at Davos and other incumbent technocrats, their solution, they don't have one. So I think that we're working towards a solution, and we're not sure if it's going to work. But I think that that's an important differentiator between the people who are backing Bitcoin and the people who are its naysayers.
And I think one other sort of point I would make is that if you read sort of through all of Satoshi's writing, the pseudonymous creator of Bitcoin, he definitely recognizes that Bitcoin could appeal to certain ideologies, but he takes steps to not actually identify with any one of them, because I think chiefly he viewed himself as a problem solver. And I think, I won't speak for myself, but I see problem solvers on this panel. I see guys who want to sort of make a solution through code, through technology, through startups, entrepreneurs who are incredibly passionate. It's a very positive energy, and I think that, sure, there's people who identify with different aspects of Bitcoin, but I think the people that I see in the ecosystem and moving in at a fast pace and building things on a day-to-day basis are positive problem solvers. And I think that that is going to be the legacy of Bitcoin.
I think one thing we'll see this year, which I think will ultimately be a failure, is that we will see the banking industry and other interested parties come up with their own implementations of a virtual currency model that is more secure, more safe, more trusted, whatever that might be. But that'll play out a lot like CompuServe and AOL and Prodigy, which is ultimately these sort of fake internets didn't survive, and I don't think the fake Bitcoins will either.
I guess if I can follow up on that, so why would those systems be considered sort of fake internets, and say some of these traditional payment systems lower their costs? How do you guys stay competitive?
Well, what I was talking about was what I think we will see as a competitive response is a lot of the industries that have something to lose in a Bitcoin world will come up with things that are kind of halfway. We built this system that we own, by the way. Nobody owns Bitcoin, right? So anytime you see a system that's owned and operated by somebody, like that should be a red flag, because that's not going to work. What works is a system that's open source, that's peer-to-peer, that's not owned and controlled by anybody. That's the only thing that an entrepreneur can have confidence to build on top of. So nobody's going to build on top of J.P. Morgan Chase's, Bitcoin. Like that's not going to happen. So I think that's the response that we'll see. I think that's the thing to look for this year.
Let me change it up on you. One of the promises where we hear about Bitcoin potentially is bringing the fees down when you do a money transfer. And I think a lot of people miss the fact that there are thousands and thousands of New Yorkers right now who work their tails off all week to earn enough money to send it back to families living in other countries. And the fees currently are very, very high. So someone could be wiring $1,000 back home at the end of the week and have to pay 7-8% in terms of a fee. If truly Bitcoin or virtual currency promises to bring those fees down closer to 1%, maybe even less, that is a huge thing. It's a huge thing for the country, but it's a huge thing globally, and it's a huge thing for a lot of New Yorkers. But I wanted to just, to the extent you all know, get your opinions on whether that is something that you truly think will happen, and if so, when.
Happening. Plenty of people who have families and businesses overseas are already using Bitcoin to move money across border and avoid fees. I don't know how big that is as a sector of the Bitcoin economy, but it wouldn't surprise me if it was 5 times the size of drugs or more.
I think that it's really one of the big areas of promise. I think one of the challenges with it scaling up right now is that you need to have a liquid market on the recipient side as well, because they need to then be able to change their Bitcoin back into pesos or whatever the the fiat currency is on the back end, those markets will develop over time. They're stronger in some countries than in others. Argentina has a terrific, very strong, exchange. I think it's China until recently as well. But it really depends on, the liquidity of the market on the back end, because that's what allows you to have this sort of efficient transfer mechanism. And these things are developing. It's early days. We're only a few years into this, and I think that the trend is very much, the friend of Bitcoin being used for that sort of remittance.
One of the things that has been most eye-opening to me, as I mentioned before, kind of the global nature of Bitcoin, and the number of meetups, angel groups being formed, businesses being created around the world to focus on Bitcoin. It just reminds me of the early internet days. People leaving their jobs to pursue, a passion for kind of making the world a better place, by using Bitcoin. And what is happening is, Fred made this point that kind of this is the ultimate network effects. And so I think about kind of the early days of Facebook. Facebook you talked about early on because it was cool, neat, fun technology. You wanted your friends and family to use it because that provided more of utility. But it lacked a financial incentive, and it was still quite successful. So what you have right now are hundreds of thousands, maybe millions of Bitcoin users around the world that are, over dinner tables and drinks and at their companies, they're talking about Bitcoin. And I have yet to meet somebody who has really kind of spent time looking at Bitcoin who has not come out of it saying, I get it. Everybody who looks into it, they get it. And that's happening at an exponentially growing rate right now.
I don't own very much Bitcoin. I bought maybe 150 to 200 Bitcoin ever. So I probably have by far and away the smallest Bitcoin position on this panel. My favorite thing to do is to give away Bitcoin. And if I'm at dinner with friends, if we went out to dinner, I would send you a Bitcoin. Probably not a full Bitcoin anymore. So I used to send a Bitcoin. Now I send a tenth of a Bitcoin, or it's amazing the feeling people get when they receive a Bitcoin from me, and they're like, "Wow, I own a Bitcoin." It's like they know that there's something there, and there is something there.
I kind of get a kick out of I feel like this was always going to happen. So it wasn't a question mark. Bitcoin being the financial protocol was the next evolution, and I'm not sure what's going to happen after. But in terms of remittances, Western Union fees are just unacceptable. You got people making hard-earned money and getting clipped ridiculously. Micropayments are all of a sudden possible. You can send 50 cents to someone in India, and it could substantially add value to their lives. So when you take dynamic pricing of paywalls for newspapers, the New York Times, you could buy one article for 3 cents, and if you liked another article that was maybe more popular, for 8 cents. So it actually would help a lot of traditional business models that have been hurt by the internet in certain ways, but now the internet has caught up where it can help them. So to me, this was always going to happen, and I'm excited it's here. I think that the promise is endless, and I think the original Rails, the company's PayPal is just Rails on Rails, and it still prohibits microtransactions on the internet. So I think that Bitcoin is that solution.
I guess 2 questions. One is a follow-on that. Have you found that you're meeting with support and friendship now from the intellectual property community? Because that's a very powerful argument. I'm wondering if there's, partnerships forming to address just the kinds of things. You don't have the Xerox copyright infringement cases anymore because you have a 3-cent article.
I think I'm not sure if I understood the question correctly, but certainly Zynga has started to experiment, in partnership with Coinbase to accept Bitcoin, and I think that takes in the direction of micropayments. And you've got, a major newspaper in Chicago also taking Bitcoin as well. And so, I think you are starting to see the first steps in that direction, which I think is very positive, because it is going to be that sort of stuff that drives the mainstream use case. It is going to put Bitcoin in the hands of, from millions today to tens of millions to hundreds of millions of people, and then you really start to get the leverage in the system.
I think I understand your question. So it's really hard to send under, I think, about $2 to $3 over the internet. So take a company like the New York Times, for example. If they're going to set up a paywall, they've either got to charge something like $5 an article, or let's say $20 for X amount of articles. And a user, for a whole host of reasons, may just decide that that pricing model doesn't fit their desire. If there's an article, though, where you can pay 20 cents or 10 cents, depending on the demand, or you can offer, so one company in particular, I've met the entrepreneur, and he's building basically a paywall, and they're going to launch with the Chicago Sun-Times, I think, next week. And a user has the opportunity to either tweet the article to sort of get past the paywall, or pay a micro payment. And the pricing it's just much more in line with sort of people's needs. And the reason was just because the existing rails and the payment systems prior to Bitcoin would not allow you to dynamically price. So that's just one example where I think all content providers are going to get more rewarded for the content that they're creating. It's not that people don't want to reward the artists, whether they're recording artists or authors or journalists. It's just that sometimes the technology doesn't make it feasible, and it encourages them not to. So.
The other question I have may be sacrilegious, but I'll ask it anyway. Banks often offer exchange-like services. And I'm wondering whether the investment community has actually thought about trying to establish its own bank.
You mean invest in a traditional bank?
No, banks can buy and sell commodities, pickles,
Right.
I mean, you call it what you want, and they can buy and sell and change it for fiat currency. And there are certain structures within banking law that permit this to be done. I'm curious whether there's been any thought given by the investment community, well, if you won't do it, we'll build our own. And whether there's been, you're talking about trying to integrate products into regulatory systems that presently exist. And if in fact there are platforms now that with some creativity, flexibility, I'm not representing that it's a just drop your application off at the door, but these are the kinds of things that we're wondering, are they potentially viable means of bringing this kind of currency into the mainstream, allowing you to have that kind of secure exchange system, and thereby opening it much more broadly to the consumer world?
There's been a lot of discussion within the Bitcoin ecosystem about this concept. Some people have actually put together some business plans. But I think all of those efforts are on hold because I think the level of engagement and the positive reception that Bitcoin companies are now getting from certain banks has led us all to believe that we're very, very close to the banking industry opening up to Bitcoin. I think we're probably 2 or 3 months away from some well-known banks coming out with clear procedures on how to work with them as a Bitcoin company, and they'll position themselves as a Bitcoin-friendly bank.
Are they going to, I'm sorry, and I'd love to hear, but is that description inclusive of a service that's tantamount to an exchange?
No. That's them providing banking services to companies, which may include an exchange.
I understand. Thank you.
I think we have time, if I can push my luck, for maybe one more question, and I'll ask it. I'm interested, just to the extent any of you, we're obviously not doing this in a vacuum. There are a lot of federal regulators involved. There are other states involved. And maybe most importantly, there's a whole big international regulatory community involved. And Mr. Liew mentioned China. We obviously saw news this morning out of Russia, news out of Canada. How do you all evaluate sort of what's going on the international level from a regulatory perspective and from the perspective of sort of the advent of Bitcoin and virtual currency, and how should we be thinking about that as regulators as we put pen to paper to work on the rules of the road?
Well, the lesson from the internet is anything that China bans, invest in. And that's a joke, but the U.S. allows Google to operate here, allows Twitter to operate here, allows Bitcoin to operate here, allows Facebook to operate here. Chinese government doesn't allow any of those companies to operate the way they operate in this country, or at all. This is about freedom, ultimately. Whether you want to live in a society that embraces innovation and free speech and freedom or not. And I'm certainly glad to live in a country that does that.
But do any of you feel like there are other countries that are doing it well, that may be doing it better than we are, that we should be looking at as models? There was some talk about Canada being very innovative right now. Does anyone have any reaction to that? Or you just want to tell us who not to do it like?
I don't know the details, but Norway, Finland, have been looking at it as a capital asset and a commodity, or maybe commodity money. And I think the UK has backtracked where their first stance in more towards the stance of the Nordic countries. I think that that kind of treatment makes sense to me, and I think it's in the right direction.
I think we've had some countries who have affirmatively said this, Bitcoin is X, Bitcoin is a currency, Bitcoin is a commodity, and therefore it is regulated under this regime. There have been others where the countries have simply said this is not covered by any of our regulations as of now. Between those two, as an investor, I much prefer the clarity of saying Bitcoin is this and is regulated in these ways versus it is unregulated. Because the regulation should and will come in the future, and that uncertainty is quite paralyzing for a small company who may find that they were breaking a law that didn't exist when they started the company. So I would prefer, to see affirmative clarity than hands-off wait-and-see approach.
I'm just glad we're doing this because I think that New York has the ability to really set the tone not only for the state and the U.S., but being a financial center of the world. I think that a lot of people are going to sort of have eyes on New York and watch what New York does. And so I think that there's a huge opportunity to set the right tone. So yeah. And back to what Fred says, it's freedom. It's very American. It's distributed, and it allows the duopolistic incumbents. It challenges them, and I think that's very healthy. I think that's very American. And I think that's what we should all be striving for.
Okay, well, on that, and that's probably a good note to finish up this panel. I want to thank you all. This was very, very interesting. You took a lot of your time, both preparing and coming here to testify. We really appreciate it. We'll probably be in touch some more as we continue to work on this. If you don't mind, we'll probably want some more of your expertise and thoughts, but it was really a pleasure, and we reconvene at 2:30 sharp. We will start the next panel. So thank you all very much.